software is changing slowly. It's requiring me to do new things that I haven't ever done before, and I've noticed that they have this new link up there for the new and better version, which I am just not ready to take on yet. All right, so today's show. Today's show, I'm going to talk about Bitcoin technical analysis and the fallacy that it is, and this can extend well beyond just Bitcoin. I mean, technical analysis is a field that started back in the 30s as a way to abstractly describe some of the things that we saw in charts and in the direction of assets, their price direction, that sort of thing. And they were very, very simple concepts, and they weren't used necessarily to actually trade off of them. So, for instance, they didn't look at, what is my configuration, what is the criteria, what is the look back that I'm using, what is, and I, buy at 70 and sell at 60. It wasn't like that at all. It was simply as a kind of a tool to help support the narrative of their overall analysis of where price appeared to be going. But since then, people wanted to get involved in trading, and particularly when we started hitting the 80s, and then when we got CompuServe and other ways that people were getting online and being able to get access to semi-real-time charts, and then the internet came along, and all along the way there were new indicators that were starting to come up, and fancy names of things like Bollinger and Keltner and Elliott and Fibonacci and all this other stuff, to the average person who is now starting to get a standing way of looking at the markets using volume, market profile, and to some extent overbought, oversold, that sort of thing. Trend traders were looking at trends, so they were using some form of momentum indicators just to know that they were still within the realm of their idea, the hypothesis. But at some point, the retail trader, they wanted to get involved with what the professionals were doing, and yet they didn't have the time to invest in what the pros were doing and looking at things from a more quantitative point of view. So they were looking for a shortcut, a way that they could get into it and make it appear as if they knew what they were doing. And this presented a unique opportunity to brokers and all of the educational institutions that the brokers sort of created. And please, don't be under any kind of delusion that all the technical analysis books there and the courseware and all of that stuff was all like a big bang explosion that all emanated from the brokers. And what's something, if you've watched some of my videos, what I call the broker narrative, which I was intimately involved with implementing on behalf of the brokers in ways, or at least had a front row seat on how it was being manifest. But anyways, over time, these different techniques of analyzing markets were really pushed out there and showing that people who didn't have a whole lot of time to invest, a shortcut method to make their riches, and particularly today with, although they're a little bit more sophisticated and people are looking at even more fancy names like Ikemichi clouds and I don't know, what else do we have out there? There's this one guy who has this YouTube and Discord that he calls Crypto Face, and he has the market cipher, and he charges $1,000 for it, or 0.1 Bitcoin, and all it is an aggregate of a bunch of off-the-shelf indicators. And he says, oh, it's not just the technology of doing that backtesting. But we have, I don't know, Heiken Ashi ideas and Crouching Tiger and Spank the Monkey. I mean, those, I might have made those up. But, we look at particularly things like Elliott Wave. Elliott Wave is a study in numerology, all right? Elliott wave, first of all, the whole idea, it was kind of born out of something that was the predecessor to that, and that was the Fibonacci sequence, which was developed by Leonardo Fibonacci, who essentially discovered this through counting rabbits and the population explosion of rabbits. And then there was this guy, Ralph, I think his name's Ralph Nelson Elliott, later on, a couple hundred years later, who was trying to describe the waves that happen in markets. And somehow Fibonacci was supposed to be able to unlock the mysteries of the universe. This magical numerical sequence was supposed to be able to identify or at least explain why a nautilus shell was shaped the way it was, why flowers had their shape, or why a ram's horn was curled like this, and why the human face had certain dimensions, blah, 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 blah. Of course, most of this is roundly debunked because there is no, or even human behavior, why it is such. And then Ralph Nelson Elliott, who was an accountant and a numerologist, thought that, he saw something in Fibonacci and this wave concept that all markets moved 5 waves up and 3 waves down, and then he applied the Fibonacci sequence as a way to kind of hit, exactly, if it hit the ratio of those sequences on each wave, that gave it even more credence, kind of layered these things on top of each other. Again, kind of this sort of snake oil, delusional type of idea that they could make it fit, because with the Elliott wave 5 waves up, if the 5 waves and the 3 waves down didn't exactly fit, you could always go to the subwaves and then the sub-subwaves, where you could very neatly take virtually any Elliott wave paradigm and fit it to the market, and then be able to somehow say that, well, look, it fits the market exactly. I can draw my Elliott wave in here and blah, blah, blah. Every point hits. Of course it hits. When you have enough points to be able to take, your spline and be able to press it, and, all of it is a bunch of mumbo jumbo. All of it. And for the most part, professionals have kind of shunned away from it. You don't see professionals talking about it on YouTube or anywhere else. They talk about their hypothesis, the quantifiable things that they've identified, patterns that they've recognized that have quantifiable nature to them. Or, advanced hypotheses. Divergences was one of the early technical indicators that really made a lot of sense, because they applied it to the Dow and the Dow Industrials and the Dow Transport. And by seeing these divergences, they could see something manifest in the market that they couldn't see just with the charts alone. So those were important. And even to today, some divergences make sense. Not the way that most people are using divergences these days, with an overbought, oversold indicator like the RSI or the MACD along with the price. And then there's, of course, even confusion about divergences, the difference between a regular and a hidden divergence that most people don't understand. And so besides the fact that people latch on to some of these kind of made-up concepts that were originally made to describe a narrative, they misuse it and then claim they know what the hell they're doing. And there's lots of things like that, particularly in the Forex field. They think that everything has some sort of Fibonacci or Elliott wave attribute to it. Of course, the person who made Elliott wave popular in the modern parlance, he has a whole cult following, and they have been predicting the complete demise of the markets for the past 30 years. Every year. They can't understand why the market just keeps on going up. Doesn't make sense to them, because they have bought into this kind of cultish idea of what technical analysis is. So if you're willing to go down this rabbit hole and believe, really believe, that this stuff is going to give you predictive powers in the market, then you will undoubtedly join the 90% of people who are losers in this market. I had one person or a couple of people in comments dispute that fact. They say that's not a fact. That is fake news. 90% of the people are not losing. It's probably more like, I don't know, 60% or 70%. Oh, I'd say it's 60 or 70%. That's fine. It still puts the odds squarely against you by using some of these techniques. But it is 90% because I've worked with most of the major brokers and institutions and seen the studies, participated in the studies. 90% of people blow up their account within 90 days. There's about 5% of people who actually make profit. They are comprised almost entirely of professionals who are not using technical analysis. There are a few retail traders out there that are doing well, being able to apply technical analysis, but it's more their intuition and their experience in the market that gives them the edge, not the TA. Then they're able to go out to the market and, there are some people out there. I'm not saying that they're all snake oil salesmen that are coming out there. What I'm saying, in pushing their technical analysis formula or recipe, what I'm saying is that they're delusional. So they're not really doing it maliciously. Not everybody. I would say the vast majority are. But there are some that are coming out there that are simply delusional. And that's a fact. Technical analysis is bunk, for the most part. Unless you're using it for trend analysis, that sort of thing, longer term analysis. But if you're going to start applying it to short-term trading, day trading, swing trading, and think that you're gaining an edge without really even understanding the underlying statistical nature of a pattern that maybe you're observing in that asset, that market, that context, then you're using snake oil and you're just doing a swag, a scientific wild ass guess. You're guessing. You're guessing. That is the unbridled truth. So if you're guessing, and if you're willing to take your hard-earned money and put it towards a guess that has no edge, don't you think that it's reasonable to say that you're a fucking idiot? I do. Absolutely. And even if you hear the truth and are unwilling to absorb it and then embrace it, then you're doubly a fucking idiot. Sure, you might like CryptoFace or Tone Vase, who's using Tom DeMark or TD sequential indicators that he misrepresents, on top of the fact that Tom DeMark himself is a scam artist. He is definitely one of the premier snake oil salesmen in the market. Yet, Tone Vase has been able to sell his indicator and his courses at $1,000 or $2,000 a pop. And people gladly will pay him the money, and he miscalls the market almost every time. He even admits that he doesn't trade, yet he gets people to follow him. It's just, it's mind-boggling. It's mind-boggling that people are willing to believe in somebody that they don't understand. They don't understand the underlying things that they're talking about, so they just take it for truth. And these people are either delusional or they know that it's bullshit, and they know that just by flashing the idea of volatility and all these riches that some people are making and hanging that out like a carrot to you, saying you can too have Lambos and hoes if you follow my bullshit technical analysis and buy my course or my book. So what is the answer? Well, what do the professionals do? The professionals look at patterns and statistics. They also deeply study and understand the markets. They understand divergences between intermarket correlations or intramarket correlations. They have contextual information that is all borne out in quantifiable data that they use heavy-ass machinery, computers, and super smart nerds to help them, develop these strategies. How do I know this? Because I was one of those super smart nerds that was involved in that whole market. And that's what we offer in PatternCast. Actually, the technology that we've offered, I believe, is superior to most of those institutions. It uses nothing but statistics. It can analyze hundreds of thousands of different types of strategies and patterns and recognize them in an instant. And then be able to tell us historically what the scenario that is presenting itself has done in the past. And then we use that as our edge. Did you see the gold trade that I put out on Twitter? Let's see. Where is that? Let's see if I can bring it up. The gold trade I put out on Twitter last night, just to give you an idea of what I'm talking about. And this was a PatternCast call. So we go to, here it is. Let's switch to that screen. There we go. So this is a call that I put out last night. And this gold trade, there were something on the order of, I think around 60 different occurrences over the past 20 years. Had somewhere around an 80 percentile win rate if you got in at a certain level. And here's a trade that made, well, almost $30 or 300 pips that I called. And look at this. Here's the call. In gold futures, if it were to drop to 490, then it's a buy. Target 1528. Brought to you by PatternCast. Now, it didn't get exactly down to 1490, but it got within just about $1. And it went up through 1528. As a matter of fact, it went as high as about 1533. That was a pattern that PatternCast uncovered that had statistically significant results. That is the type of trade where you have edge, because it recognized the pattern that we can't see. We look at what we're looking at there. I don't know. How do you recognize that as a pattern? I don't know what that is. But PatternCast looked at that and said, that thing, whatever it was for the past 4 days, has happened a whole bunch of times before in the past 30 years. And every time it's happened, when it's reached this kind of retracement, it's done this. It says probably a good idea to go along with that because it's happened so often. And so that's what we do. That is the ultimate essence of everything that PatternCast does. We don't use statistical analysis. We don't use technical analysis. We use statistical probabilities on quantifiable patterns and moves and retracements, and this kind of lexicon that we've created where we can train the system to recognize patterns, or what some people might call a strategy. And on the fly, it can map out hundreds of thousands of these possible permutations, and then find them and how many occurrences that they may have had over the past 30 years in like an instant, like that. Boom. And so then we can do this to all these different assets and then find, is something setting up here or not? Has this happened in the past? How many times has it happened in the past? What is the context around that? Are we coming into that context? What is the possible context that could push us into a different type of pattern? And what's the statistical probability around that? That's what we do. We do that for futures, Forex, stocks, and Bitcoin. Now we're in the midst of a trade that we took 2 days ago that is another winner on Bitcoin. That will make 11 out of 12 winners with Bitcoin since we opened the service about 2.5 weeks ago, 3 weeks ago. 11 out of 12 winners. If it reaches the extent that we think it's going to reach, then it'll trigger in our favor. So we're going to take that. And I'll tell you what it is. I will tell you. So we're almost there. The ultimate target right now, we are well into profit right now. You can, let's see, I have to show the screen, huh? So you can see this first line here at 10,400. That's where I take my first profit. And then up here at 10,526, that's where I'm going to go short. I also have other shorts above that I'm willing to take from a statistical point of view that also are good moves. But the pattern shows that it should hit this 10,526 and then come down to about 10,000 again within the next 4 days. So this trade that we're currently in has already proven to be a winner. So that will make it 11 out of 12. If this trade goes short and then becomes a winner, that will be 12 out of 13. And we'll just keep on going on from there. Now, you can get into PatternCast, Bitcoin, or the traditional markets by going to our website. If you get into Bitcoin, the crypto PatternCast, right now we're only doing crypto. I'm sorry, we're only doing Bitcoin. We will be doing other altcoins, but we're waiting to be able to amass enough historical data so that we can make it viable. There's a lot of work involved in that. We're very, very close. But if you use the coupon code CRYPTO, you get $400 off. If you pay us in crypto, I'll rebate you another $200. There we go. Teddy K says, maybe the title of the podcast will knock some sense into the hodlers. Nothing is supporting Bitcoin. It's a dealer. It's deader than dead, but the demand for casino play is alive. Well, I agree that people want to be into it because the incredible volatility and there is opportunity. And that's why I like it, because there is a lot of volatility and there are identifiable patterns that we can trade. I don't think it's deader than dead. I think it's going to continue on like this. But I do think that there is a lot of people out there scamming retail traders like CryptoFace, huge scammer, or Tone Vase, another big scammer, and virtually everybody else out there that's using technical analysis that I put more into the delusional camp. People like The Moon, delusional. So CC says, where is your Bitcoin hat? That's not a Bitcoin hat. That is a Boston Red Sox hat. And Salix says that, Teddy K, I disagree. Bitcoin is not dead. It is just not cemented in the real world. Until then, I'll make some money either way. Yeah, that's the way I look at it too, Teddy. I don't really care whether or not it is going to be used as as some kind of reserve currency or whatever the idea is. All I care is that it has great volatility, and it's pretty easy to use a statistical pattern recognition engine on to gain an edge and trade it. CC says there's a kids trading room, crypto trade room from what's to trade, and I don't know what to say. I mean, if you really believe in that stuff, fine, go ahead. You know what? I'll tell you what. I'll take your trades. I will finance your trades. Don't go to the broker. Go to me. Let me finance your trades. I'd love to do that. That's better than money in the bank. That is like being the bank. Volume profile is good and it is one of the old techniques that professional traders have used forever, right from the time of Jesse Livermore, being able to look at volume and orders as a way to identify where the market finds value and where it doesn't find value. So yes, I agree. Market profile is one of those technical indicators, or TA, that is real. And it's a forward-looking indicator. It's not looking in the past. Why would Bitcoin diehards believe everything bullish about Bitcoin? Uber allows us to get into strangers' cars. What could ever go wrong? All right. They're having a little conversation here back and forth. Ernie, what do you think of Larry Williams? Larry Williams has had success. That's all I can say. He's had success as a trader and as an educator. I don't know which is greater. So, there you go. I don't follow anybody. I follow no one, except for maybe Nassim Taleb. I follow his philosophy. With his trilogy or quadrangle of books, Black Swan, Anti-Fragile, Fooled by Randomness, and Skin in the Game. Absolutely essential books for a trader. Ernie, you and I may be the only two people in here who remember Max Headroom. Yes, I remember Max Headroom. We're wasting our breath. Yeah, Max Headroom was on the original MTV. And do you remember who was the host of Max Headroom? The person who actually talked to Max Headroom on MTV? She's now a so-called journalist or reporter or TV personality. It was Soledad O'Brien when she was just a young girl. There's a little... and I think that was during Adam Curry's hour when he was a VJ on... when they actually did music on MTV. So Alex says, I was just a sperm cell. Anyway, been a while since I followed a live chat. Lot less viewership, but glad. Okay. It'll get bigger. All I care about is that after I broadcast these live, I usually get 500 to 1,500 people actually viewing it. Yep, and the whole viewership, the subscribers, is steadily rising back to 10,000. Right now, we just broke 6,000. I think that's going to start escalating. I think by the end of this year, we'll probably be over 10,000. That'll be great. All right, we're not going to go into nostalgia here and talk about Rawhide or Gunsmoke. That is a good sign that this show is over. I want to thank everybody for showing up in your comments. But please, if you want to trade sanely and you're a retail trader and you don't have access to the mega computers and mega brains of an institution, then use PatternCast, because we provide that for you. We provide real statistical analysis, pattern recognition with a definitive edge, and our results prove it. Again, use crypto for the Bitcoin version and get $400 off the yearly. All right, we'll talk to you later. Thank you all for showing up. Take care. We'll see you next video.